Hi everyone, my name is Mona and I'm the founder of the Enzyme protocol and I'm also the CEO and founder of Avant-Garde Finance. Today I'm going to talk about DAOs. Actually, this is the wrong deck, guys. Maybe. Sorry, I'll be back in a second. Okay, I'm gonna try again. It's the wrong deck. It's my fault, so sorry about that. But what I'll do is I'll just read from my laptop and try and match some slides. So yeah, what I wanted to talk about today, I'm going to give a quick introduction on Enzyme, and then I'm going to talk about some challenges the DAOs and their treasuries are facing today. And then I want to talk a little bit, by the way, for context, Enzyme is also the first DeFi protocol in history to decentralize its governance and become a DAO. So we've been a DAO for nearly 3 years, so I feel like we have a lot of experience, good and bad, at doing that. And then I kind of want to move on to what an ideal DAO treasury management toolkit looks like. And then give some helpers and ideas on how we use Enzyme in our treasury management and how a lot of other DAOs are using Enzyme and why they're using Enzyme. So in terms of challenges that DAOs are facing today, the whole point of being decentralized is basically being transparent to your stakeholders, and we don't always see that. We see a lack of sometimes organization, and especially on the operational side. And we often see a compromise on trustlessness and accountability. And if we think back to, I think, especially some of the OGs and why we got into the space originally, these are the values that, underpin DeFi and DAOs, and I think we should be working very hard to preserve them. The reasons that we sometimes compromise on those things are completely understandable because we're in a really fast market. And, the priority for most protocols, and I think it's rightly so, is building. I think, running a DAO or being involved in a DAO is hectic, disorganized. Most people are not full-time in the DAO, and so it's very time-consuming and distracting to be involved. Tooling is also poor, so it does take more time than usual. There are conflicts which are not always completely transparent. There's a lack of expertise sometimes, depending on the DAO, on the treasury management side. We talked about the lack of tooling as well, and things always moving very quickly. And so the effects of these things are that people sometimes overlook their treasury management or get lazy to think about it. And so what can happen? I think we've been in the space for 5.5 years, so we have actually lived through and fortunately survived the bear market, but it was very tough, and many people didn't. So the effects of bad management at the treasury level, and you always think your token's not going to go down in a bull market, but trust me, in a bear market, it goes down and down and down and down. And just when you think it can't go down anymore, it goes down more. So, I remember a small anecdote, but I remember, buying our token all the way from $80 all the way down to $3, and my husband actually pulling me off my laptop saying, "You can't buy anymore. I'm not going to allow you to buy anymore." And I said, "But it's such a great price." And he said, "You've been saying that all the way down." So I think, the effects of bad treasury management, we kind of learned the hard way, and we suffered a lot, but we did pull through. We were one of the lucky ones, but the effect of a bear market when there is poor treasury management is that projects can very sadly become unsustainable, despite being really good ideas and necessary tools. And also, if things are done improperly, poorly risk managed, there can be reputational damage and loss of trust. So we can do better. That's the good news. As DAOs grow, treasury management becomes more sophisticated and complex, and we need to collectively evolve with those tools. And Enzyme, what we work towards providing is 100% transparency to stakeholders, built-in automated operations and administration tools so that DAOs don't have to worry about that, and then accountability through real-time and historical reporting, which I'll get into a little bit later. Okay, so the second part of the presentation, so we talked a little bit about the challenges. Now I want to talk about like the ideal DAO treasury, characteristics that we look for. Keeping funds in a DAO-controlled multi-sig or non-custodial governance contract, so like Open Zeppelin Governor or Compound Bravo or any of those. Communicating diligent and transparent processes through the community around what the portfolio management should look like, either delegating that to a subcommittee but whichever way it is, it should be properly documented and easy to find. Documentation is important. Keeping the funds on chain, I think, is really important. We're moving on a bit more now from transparency to operations and risk management. I think what you tend to see is a lot of DAOs taking money off chain, doing something there, and then you obviously lose the transparency, you lose the risk management, etc. And then another characteristic is automating reporting by indexing on-chain events and streaming like that data into real-time reporting and historical reporting. And then using smart contracts to enforce certain behaviors. So, for example, to delegate management in-house. I think we all probably will agree, anyone who's been involved in a DAO will probably agree that delegating the execution of a strategy to a single person is good because it's efficient. Trying to pass a vote in a DAO takes forever, and you often miss an opportunity by the time the vote passes. So having delegation is important, but you also have to have policies that assure risk management around that delegation, that person can't go rogue, they can't steal the money, misappropriate the funds, or do something with them that the DAO hasn't pre-approved. So that's what we refer to as policies prohibiting the deviation from a standard, and that's something that we have built into Enzyme. And then the last but not least is just providing your stakeholders with a link to what your DAO is doing at all times. So we've talked a little bit about the challenges. I've talked a little bit about what we think is the ideal treasury management characteristics, and then the last thing that we want to talk about is maybe give a brief intro on Enzyme and talk about some of the toolkits and helpers we think that we've built that can help other DAOs too. So one of the ways we think DAOs can use Enzyme is by creating a vault with their multisig or with their governance contract. Oh, sorry, I forgot to change the slide. So yeah, here creating a DAO with your multisig or contract. And then basically, once you create your vault, it's highly configurable. So you can build in rule sets around things like, if you're going to delegate trading to Jim, and then Jim is allowed to interact with XYZ protocols, or he's not allowed to interact with these other 4 protocols. And if Jim loses more than 5% in trading slippage losses in, let's say, a 7-day rolling period, his trading permissions will automatically be revoked. The DAO will always have permissions, the sort of ruling permissions. They can revoke trading at any time. They can add new delegates at any time. But it allows the DAO to be really efficient while still being secure and transparent to its stakeholders. And then once you've created and configured your vault, the vault, the DAO and also the delegated traders can access all the DeFi protocols and interact with those DeFi protocols within the constraints that were programmed into the parameters. So Enzyme is a protocol which has been on mainnet since March 2019. So it's fairly battle tested, and and basically the DAO, once it's configured, the vault can just deposit the funds into the vault and then manage it in that nice, efficient way. Another helper, not all DAOs have the community or the expertise in their community to manage DAOs. So one of the things we've done since decentralizing Enzyme and stepping away is setting up Avant-Garde Finance, which is a company that helps DAOs with their treasury management if they require that and they don't want to do it themselves. And so what we tend to do is work with you to identify challenges, needs, and desires. We'll propose a particular strategy that suits your needs. We'll build those parameters into the contracts for you, customize them, and then we'll start managing on your behalf if you delegate that to us. And then obviously we'll provide you and your community with an interface and a link that provides you with all the real-time reporting there. The benefits there are that you get the peace of mind, you can outsource it to someone, you have the experience. We're a team of engineers that have been in DeFi for 5.5 years, and we all have traditional finance backgrounds, so we know DeFi and TradFi quite well. You have someone that you can ask questions to and field questions to. Like we got a lot of questions obviously in the last couple of weeks on what's happening in the markets with various situations, and you get full transparency, it's less expensive, and you can focus on your core business. So some of the DAOs that are using us today, or the projects that are using us today in that way, are listed below. And I think time-wise we're good, or yeah. Okay, so yeah, and then there's other ways, like Enzyme is a broader platform. Maybe that's the last thing I'll say. Enzyme is a much broader platform. Anyone can create their vault and their strategies, and basically some of them have performed very well. All the track records are on-chain and audited and trackable. So a third option would be to discover a manager on the platform that you like, that you think has performed well. Maybe get in contact with them if their contact details are on the kind of information page, and then consider depositing some crypto funds with them instead. So we talked about the DAO challenges that are faced in treasury management, which are totally understandable. We talked about why there's treasury management is so important, especially in this market. And we talked a little bit about what we see as like the sort of holy grail of good treasury management planning at a DAO level. And hopefully we've left you with some ideas on how you can use Enzyme to manage your treasury at a DAO level. I think we're okay for time, so but that's actually all I had prepared. So if anyone has any questions, can I take? No? Yeah. Yeah.
I think earlier you mentioned transparency issues within DAOs.
Yeah.
I guess give more of an elaboration on that.
Yeah, I don't want to call names out or anything, but I guess I can talk about some of the things we've seen happening, which are just, DAOs or multi-sigs just saying, hey, it's like a little bit hard to manage a treasury when we need 4 signatures for every transaction. So can you just send the funds to my wallet and I'll manage, them, and then I promise I'll send them back tomorrow. And that these are the kind of things that they might, a lot of people don't necessarily pay attention to them in real time, but and most of the time they're okay, but then there's like 1 out of 10 times they're not okay, or 1 out of 100 times they're not okay. And then you have, compromised the entire project, the integrity of the project, the value of the DAO, the values that underpin a DAO, just because of a bit of laziness and maybe carelessness. What's the other thing I was looking for? Yeah, just, not having the time, the headspace to like think of a better solution. We all face that. We're all like really busy trying to build and like, deliver and stuff. So that really depends. We leave that to them. Like, it really depends on their jurisdiction, where they're based. In the case of a DAO managing its own treasury, it wouldn't be that they wouldn't need anything because it's just their own capital. But in the case of where you're accepting money from other people's, it's quite often that you do need, depending on like lots of things, like whether you charge a performance fee, a management fee, where you take your investors from, whether you whitelist them, whether you KYC, AML. There's so many things to consider. So it's really hard to give a one answer suits all. So most of the managers at the moment on our platform take care of their own situation, like, figure things out themselves. But interestingly, Avantgarde Finance, the company that sort of builds services, provides services on top of Enzyme, is actually working towards building out some legal templated solutions that managers can plug into. And we're not quite there yet. Like, we're waiting for some confirmations from regulators and approvals, which we're hoping to have by the end of the year. But we're, if you're interested, though, we have quite a lot of information we can share on that, and we could probably get you started now. But we're thinking much bigger, like how to roll this out to a much bigger audience and scale it. Yeah, so when people deposit into an Enzyme vault, so this is actually a really good question. I'm glad you brought this up. I mentioned the configurability, like Enzyme vaults are super highly configurable. And by default, or until recently, by default, anytime you deposit into portfolio, which is also known as redeeming in kind. With our V4, which came out like very recently, like in February or March, V4 introduced even more configurability and introduced a new type of position. And those positions were things like not totally fungible positions, so things like borrowing on Compound or Aave, or holding an NFT, or that kind of thing. And these obviously are not divisible positions, and they're also not always visible in the contract. So that wouldn't hold true if you were interacting with external positions. You would basically be able, so we've designed some risk management policies to prevent public vaults, that have multiple investors from being able to interact with external positions unless they override that, and then we flag it on the interface. So we say to investors or depositors on the way in, just be aware that if you come into this product, of this vault, they may be interacting with external positions because they do not have a policy to forbid them, and therefore you may not always be able to redeem 24/7. And then just the last thing on redemption is that in your configuration process, you have the possibility of choosing to let your investors or your depositors redeem in a single asset of your choice up to a certain amount of your choice. So it's, like I said, you can design it in any way. We've thought about problems like we try to make it rage quittable for the public setup, and we trust that people will use it responsibly, but if they don't, it will be transparent anyway. And let's say you've created a vault that had the policy that said you cannot use external positions because we want this to be 24/7 rage quittable. Another good question would be, well, what's to stop you going and changing that policy as the owner, as the DAO? And the answer would be, we have a cool-off period that if you did change any of these critical parameters in a vault, or what we would see as security critical parameters, or fee, a DAO might charge a fee, for example. If you change that, we have a 7-day cool-off period. We're actually building in automated opt-in notifications, so people can actually create a login on the app and receive notifications if the DAO or if the vault manager changes any parameters. So if they change the management fee from 1% to 10%, the idea is you'll receive an email if you've opted in for the notifications, and you'll say, manager X has just increased the fees, you have 7 days to rage quit before the new fees take account. Or if you remove that policy that I mentioned, there's a 7-day cool down period for people to opt out if they don't like the new setup. So we try to preserve as much as possible the trustlessness the decentralization values and the transparency as much as possible. Cool. Thanks a lot, guys.